It's $19,968. So it's a little bit less than the income rider, not much. But let's answer that question. It's a great way to maximize your Social Security income, but at the same time, they're probably going to be on the hook for at least 35 years of income. Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about a $300,000 annuity and what the payout is. So if you've got $300,000, you want to put it into annuity, I'm going to show you all the highest payouts. But if you want to, see what a $500,000 annuity or $1 million annuity or a $100,000 annuity would pay you, then just go to my website, johnstevenson.com, and you will see my annuity calculators right there. You can plug in your own numbers and you'll be able to see exactly what the payouts would be for you right there. So if you're looking to buy an annuity, you can absolutely go to the link below and book a call with me, and we'll get on a Zoom call and I'll chat and I'll show you everything that's available. Otherwise, you can book a call on my website as well. But let's answer that question. So I'm going to share my screen and I want you to see exactly what is available right now because rates are great. So I'm showing someone in Florida. They're married. They're both 62, but they want to take income in 5 years at 67. So they decided to wait until 67 to take income because that's when they're going to take income for their Social Security payouts. So maybe they got a pension they want to defer until that point as well. And so this is a great strategy. It's a great way to maximize your Social Security income, but at the same time, maximize the amount you'll get from $300,000. So if we're looking at income and it's guaranteed for both lives, so it's a joint payout, then this is the payout right here. And you can see all of the annuities. There's a lot of annuities. This is just the first page. But if we're looking at the top one, this happens to be with Corebridge. And they're going to pay $31,208 for the rest of their lives. So if we look at that and say, okay, what does that look like over that time period? It's like $900,000, okay? And that's if they take it out for 30 years. If they take it out longer, then they're gonna take out more. Okay, it's that simple. Now the account balance doesn't last. You can see right here the account value. See this? This runs out. Okay, even with index growth, they're giving you some of the index earnings from the S&P 500 because they're investing in call options, but they're not giving you all of it. They're just giving you some of it because this is not a growth product. It's an income product, and so it's giving you a lot of lifetime income, which is what it's designed for. But the account balance does run out. But if something happens to you and your spouse during this time, the death benefit's still yours. You can see it goes to your beneficiaries right here. So you're just leveraging your money for a higher pension income. So I just want to make you aware that's kind of how these work, but they really are geared towards giving you as much as possible for your $300,000. So let's go back here and we'll say, okay, well, I don't want to take income at 67. I want to take it immediately. Is it going to be less? Of course it's going to be less. So we want immediate income. It's $20,000. Because again, we're both 62, I'm married, and if my wife is a female, she's going to live a long time, probably longer than I am. So if that happens, they're probably going to be on the hook for at least 35 years of income. You see what I mean? It's just expensive for the insurance company to do that. And so they offer a lower payout when you take it immediate versus later because you just don't give them the money to grow as long, and so they just can't guarantee as much income. So still a decent payout, but this is the immediate payout that you would get from $300,000. If you want more, you just put more premium in. So if you want like $40,000 immediate, you just double the premium. So it'd be $600,000 instead of $300,000. So let's say you're thinking, you know what? I'm going to maximize my Social Security, like maximize it. So I'm going to take it at age 70. And so because I'm doing that, I'm also going to take this annuity income at age 70. What would that look like? Well, I'm going to pull that out to age 70. And again, this could be different for you. You might be 55 with a 401k that you might want to roll over, and you're not going to take income until 65. That's 10 years deferral. You're going to get a lot more from that $300,000. Again, that's why you should go to my website and check out the annuity calculators for yourself. All right, so 70 years old, I'm deferring it for 8 years. We're both 70, we're taking it. Look at that, $41,000. So I get $41,000 the rest of my life, and so does my spouse. So it's a great way to generate a lot of lifetime income from relatively lower premium. And it's just because I gave it to the insurance company for a longer period of time. Okay, so it's a great way. It's a great strategy. If my spouse, let's see if it's any different. If she is 67, let's see if that's any different at all. No, because they're basing off of my age. So yeah, it's not any different. But if she is younger, let's say she is 2 years younger than me. Is that going to make a difference? Yes, it is, because she's younger. She's going to take income longer. And so, yeah, they're going to give you a little bit less income. Not much though. It's only like $1,000 less. So this is almost 40 grand. So anyways, that's not bad. Now these are income riders. Income riders are great because they're flexible. You might decide, I'm going to take income in 5 years or 8 years or 10 years, but I'm not sure. So with an income rider, you can purchase it. You get guaranteed growth until you take income. And you might decide to change your mind. You might have initially told me you're going to take it in 5 years, but then you might take it just a year from now, right? It's good to have the flexibility so that you can do that. With a SPIA or a DIA, which we're going to look at next, you cannot. Okay, you throw your money in, it is guaranteed. You still got lifetime income, but you cannot change the dates. Okay, it's irrevocable. There is no cash value. You cannot cash out. You cannot cancel it, get your money back. With an income rider, you can. You're going to have surrender charges, but you'll still get most of your money back. So anyways, that's something to think about. So let me go to the SPIA. We're going to take the same 300 grand. I want to make sure there's cash refund if something happens, so that that money does not go to the insurance company. Again, it's a joint life. Same $300,000 and immediate. Let's say spouse, let's say 12, 18, 19, 62. So it's just same age, okay? Okay, Massachusetts Mutual. 1663.94. So roughly 1664. So 1664 times 12. It's 19,968. So it's a little bit less than the income rider. Not much, but it still is a little bit less. So it's lifetime income as well. And that's immediate. So what if you wanted to do a certain period as well, which means if something happens to you and your spouse, this is still a lifetime income product, but if something happens to you before 30 years, like you guys both die, then the income will continue at least for the end of the 30 years. So no matter what, it's going to do it for 30 years. But if you live longer, it's a lifetime contract as well. So some people will do this if they want the income to continue to a beneficiary of their choice. So this one, it gives me roughly the same income. It's a little bit less though. It's like $1,597. So, but it's still, at least it gives me that. So that's nice. That's one thing you can do with SPIA contracts that you cannot do with other ones. Let's go back to the cash refund just to kind of do a straight comparison. And then I'm going to push it out 5 years, kind of like the income rider that we were looking at. Okay, so 2030. See what that looks like. All right, Mass Mutual is still the highest. All right, that's not bad. So 2374 times 12. It's 28,488. So not as much as the income rider. The income rider's definitely more than that. So it's just different. Just you look for whatever is best for you. And that's why I always tell people, go to my website, go check out the annuity calculators yourself. Okay. Find out for yourself which one's paying out the most. And then reach out to me. Okay, there's a booking link right on my website and you can reach out to me at that time. It's a lot better, in my opinion, to shop around and then reach out to the advisor instead of reaching out to the advisor knowing they're going to try to sell you something, and it might be the best, but most of the time that I've seen these, they don't give you the best. They'll give you something that's okay or subpar, and they're making a huge commission and you're getting less income, much less than you should be getting for that money. And so for me, transparency is so important. If you're looking for an annuity contract, it better be like if I'm looking for a house, I'm going to be looking on Zillow, right? I'm going to be looking on realtor.com. Okay. I want to be able to see what houses are available, what the prices are before I reach out to an agent and then have him go start showing me houses, right? That's what I want to do. Otherwise, I'm not going to really want to reach out to him until I've kind of done my own homework. That's what you can do on my website. You can go there and you can look at annuity payouts for yourself. And then if it's right, reach out to me and we can talk more. So I'm happy to help. I'd love to sell you an annuity, but I'm not going to sit here and try to hard sell you. I'm just going to show you what's available. And of course, if you're looking to purchase, I'd love to help. So again, there's a link below this video. There's a link on my website. And if you got questions, comment below. If you like the video, like, subscribe, share. And I really appreciate you. Thank you so much for watching, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.